Hello everyone, welcome to the Powerhouse. Bitcoin has recently hit a new high, briefly topping 100,000 US dollars. Why is it surging? How does it relate to gold and other assets? In today's video, I'm going to share of my thoughts. Hope this will help you. Bitcoin is a digital asset, a product of technological and financial innovation. As a result, it often shows a positive correlation with the tech sector in the stock markets. So Bitcoin is considered a risk asset. For example, recently the tech-heavy index Nasdaq has also hit a new high. Bitcoin surge is not pure speculation, as has been boosted by the prevailing risk appetite in the financial markets, known as risk on. Bitcoin has similarities with a commodity. People often refer to Bitcoin as digital gold. So what's the similarities and differences between gold and Bitcoin? Firstly, gold is a commodity, meaning its market value closely tied to supply and demand. However, gold is not an ordinary commodity. Historically, people used gold as physical money, then came paper money, followed by the gold standard. Nowadays, central banks use gold as a reserve asset. From this perspective, Bitcoin shares some similarities. It was created as a means of decentralized payment based on the blockchain technology, though it is not widely used for daily transactions. For some investors, Bitcoin is viewed as a reserve and store of value digital asset due to its scarcity. Bitcoin's protocol caps the maximum supply at 21 million coins. As of 2024, about 20 million are already in circulation. Due to the halving cycle every 4 years, it is expected to reach the cap by 2140. Hence, Bitcoin is arguably more scarce than gold. Currently, Bitcoin's market cap is about 2.4 trillion US dollars, whereas gold market cap is above 24 trillion US dollars, about 10 times larger. That would explain why gold is less volatile than Bitcoin. Psychological factors and retail investor enthusiasm played a key role in driving price movements in both assets. Unlike equities, which are valued based on the prospect of business growth, both Bitcoin and gold lack a traditional valuation model. Take gold as an example, especially in Asia, people buy gold jewelries and shops also sell gold coins. There's almost innate hoarding preference for gold. Similarly, this pattern is starting to show in Bitcoin, especially among the Generation Z, people who are born between 1995 and 2010. According to Gemini, 51% of the Gen Z owned crypto assets. In the United States, the Trump administration has established a Bitcoin strategic reserve. The US government currently holds about 200,000 Bitcoin. Many institutions are also widening their adoptions in portfolios and offering clients Bitcoin and derivative products. Gold is traditionally seen as a heavy asset, whereas Bitcoin is considered risky assets, meaning that during the market turmoil, gold tends to go up and Bitcoin usually falls. However, from a personal point of view, Bitcoin might become a heavy asset in the long term, which are used to hedge inflation and store of value. Cryptocurrencies are still at early stage of development and are not accepted by wider market participants. However, one thing they do share is a negative correlation with the US dollars. When the dollar weakened, it tends to boost both gold and Bitcoin.